Welcome to the URC Research Center podcast for July 2026. I'm Corey Miller, State Economist from Mississippi and Director of the University Research Center. This month's podcast discusses the latest forecasts and outlook for the Mississippi and United States economies. Let's get started. Higher tariffs and the war in Iran continue to weigh on growth prospects for both the U.S. and Mississippi economies. These are being somewhat offset by investments in artificial intelligence and the One Big Beautiful Bill Act passed last year. Inflation is expected to remain elevated over the medium term, and the ebb and flow of oil prices will be critical to how the forecast develops over the coming months. Federal employment in Mississippi fell by 2,000 jobs in June, a decrease of 0.2%. Compared to June 2025, employment in the state was higher by 4,800 jobs, an increase of 0.4%. Compared to February 2020, employment in the state in June was higher by 2.7%. Employment growth across sectors in the state since February 2020 remains uneven. The state has added a little over 31,000 jobs as of June, less than in previous months. Trade, transportation, and utilities are responsible for more than half of the total gain in jobs. The professional and business services sector has increased in jobs added in recent months, while the healthcare sector has pared some of its gains. Employment in manufacturing and government both remain well below their February 2020 levels. Notably, the accommodation and food services sector, which was arguably the sector hardest hit by the pandemic, has yet to completely recover all of the jobs it lost in 2020. Mississippi ranks in the middle among all states in terms of jobs added since February 2020. As of June, the state ranked 29th, a slight decrease compared to previous months. Both residents' employment and unemployment decreased in June, according to the Bureau of Labor Statistics. Notably, the labor force in the state decreased for the seventh consecutive month in June and is up only 0.7% since February 2020. Mississippi ranks slightly higher in residents' employment growth than in establishment employment growth. The 2.8% increase since February 2020 ranked 23rd among all states as of June. Job openings in the United States climbed to almost 7.6 million in May, the highest level in 2 years. The numbers of both job openings and hires have shown more volatility in recent months. The U.S. labor force participation rate fell to 61.5% in June, which was the lowest level since March of 2021. The labor force participation rate in Mississippi decreased for the fourth month in a row in June to 55.2%, which was the lowest rate for the state since July 2024. Seasonally adjusted initial unemployment claims in Mississippi were about 4,600 in June. Initial claims remain below the monthly average from 2019, an indication widespread layoffs in the state have not occurred in recent months. The number of seasonally adjusted continued unemployment claims in Mississippi decreased to just under 30,000 in June, as continued claims remain well below the 2019 monthly average. The long-term trend shows a gradual rise in continued claims, a signal that job seekers in the state are taking longer to find jobs than in previous years. Initial claims for United States unemployment insurance benefits decreased to 208,000 in the week ending July 11th, down 8,000 from the week before, which marked the fourth decline in the last 5 weeks. For the week ending July 4th, continuing claims in the United States in regular state programs fell to 1,805,000, down 16,000 from the previous week. Both initial and continued claims are still below levels seen late last year. The real average hourly wage in Mississippi increased almost 1% in June and was slightly higher compared to 1 year ago. Since the end of the first quarter of 2025, the real wage in Mississippi continues to ebb and flow as inflation moves up and down. After reaching an all-time low in May of 44.8, the University of Michigan Index of Consumer Sentiment rebounded in June. An easing of inflation and gasoline prices in particular likely led to the improvement in the index. The value still remains well below its pre-pandemic levels, however. The year-over-year change in the Consumer Price Index in June was 3.5%, which marked the first year-over-year decrease since January. This decrease in the 12-month change in June was driven primarily by lower gasoline prices as a result of the ceasefire in the conflict in Iran that occurred the previous month. Nevertheless, as hostilities in Iran are increasing, we may see an increase in inflation in the coming weeks. In June, the 12-month change in the core consumer price index fell for the first time since January as well to 2.6%. The core CPI excludes the more volatile values of food and energy. However, higher gasoline prices over the previous 3 months likely bled over into the core CPI as well, so that the decrease in gasoline prices in June was also reflected in the core CPI. The 12-month change in the price of gasoline as of June was almost 27%, according to the Consumer Price Index. The 12-month change in the price of electricity was 4%, down for the second month in a row. The year-over-year changes in the prices of food and shelter were both 3% or more as of June. The firm S&P Global Market Intelligence continues to project no action by the Federal Reserve regarding interest rates in the year 2026. Their current prediction is that a reduction in the federal funds rate target will occur in June of next year, and that this will be followed by another reduction of 25 basis points in December of 2027. Following these reductions, the target rate will reach a neutral or non-stimulating or non-restricting range of 3 to 3.25% by the end of 2027. At that point, the rate will remain in that neutral range through the end of the decade. However, given the increase in hostilities in Iran, which could lead to higher inflation in the coming weeks, S&P Global also stipulates that the possibility of rate hikes in the months ahead is to be taken seriously. Looking at interest rate futures markets, they currently set a cumulative probability of more than 80% for a 25% basis point increase in the federal funds rate target before the end of 2026. And these markets also indicate a probability of more than 50% that this increase occurs at the September meeting. Markets also set a probability of 2 increases of 25 basis points in 2026 and almost 1 in 3. Turning to forecasts, the assumptions regarding tariff developments have been updated this month as the Section 122 tariffs, which replaced the IEEPA tariffs that were declared illegal by the Supreme Court in February, are scheduled to expire this week without congressional approval. However, these will likely be replaced by other tariffs that the Trump administration is seeking to impose. Regardless, the effective tariff rate is assumed to have converged to about 10%, and if these tariffs, Section 122 tariffs, expire without replacement, then the overall effective tariff rate would fall to around 8 to 9%. Once again, tariffs are expected to reduce growth in the U.S. economy by 1/10 to 0.5 of a percentage point in 2026. In its latest forecast, the firm S&P Global Market Intelligence estimates U.S. real gross domestic product will expand 2% in 2026, a forecast that is down 1/10 of a percentage point from the previous month. U.S. real gross domestic product is projected to expand 2.3% in 2027 and 2028, forecasts that are 0.2 of a percentage point and one higher and 1/10 of a percentage point lower, respectively, compared to last month. The University Research Center estimates real gross domestic product for Mississippi will increase 1.3% in 2026. This forecast is up 1/10 of a percentage point from June. The forecast for Mississippi real gross domestic product growth in 2027 is an increase of 1.1%, which is down 1/10 of a percentage point from the forecast of the previous month, while in 2028, state real gross domestic product is forecast to expand 1.2%, forecast that is also down 1/10 of a percentage point from June. U.S. payroll employment is projected to increase 0.3% in 2026, according to the latest forecast by S&P Global, which is unchanged from the forecast of the previous month. The firm estimates U.S. employment will increase by 0.1% in 2027, forecast that represents an increase of 1/10 of a percentage point from June. In 2028, S&P Global projects U.S. employment will rise 0.3%, a forecast that is 1/10 of a percentage point lower compared to the forecast of the previous month. The University Research Center's latest forecast estimates that payroll employment in Mississippi will remain unchanged in 2026. The 2026 estimate is 1/10 of a percentage point lower than the June forecast. In 2027, payroll employment in the state is projected to remain unchanged, an estimate that is also the same as in June. The University Research Center forecasts payroll employment in Mississippi will fall 0.2% in 2028, an estimate that is up 1/10 of a percentage point from the forecast of the previous month. The latest forecast by S&P Global projects consumer price index inflation will reach 3.4% for all of 2026, a forecast that is 0.4 of a percentage point lower compared to the previous month. The consumer price index is projected to increase 2.4% for all of 2027, a forecast that is also 0.4 of a percentage point lower than in June. S&P Global estimates the consumer price index will increase 2.5% in 2028, a forecast that is 0.4 of a percentage point lower than in the previous month. These forecasts have the caveat that they were made before conflict in Iran resumed earlier this month. In summary, the U.S. economy is expected to grow an average of about 2.2% a year through the end of this decade. The Mississippi economy is expected to grow an average about 1.3% a year over the same period. Payroll employment is expected growth in both the U.S. and Mississippi economies is expected to be roughly flat through the end of the decade, as U.S. payroll employment is forecast to grow about 0.3% a year, whereas Mississippi payroll employment is expected to decrease an average of about 1/10 of a percent a year. There's currently no recession in the forecast, as the risk has fallen from earlier in the year to the range of 15 to 33%. Inflation is expected to remain above its target of 2% annually through 2028. Thank you for watching. Remember, you can subscribe to our publications and follow us on X, Twitter, @Mississippi URC.